Good morning, it's Jeffrey Cohen, May 10th. Market is about to open in about 20 minutes. Wanted to share with you the results of our model run, talk about the markets, talk about what's been happening, and just share some insight. So we published a blog post today, which was the Russell 2000 is in correction territory. And so I wanted to share it. Our model told us this. Of course, you can feel it in the market today, right? So when we run our models, we look at the S&P 500, the Russell 2000, and the QQQ, and we calculate expected future market returns based on those three and based on risk-free rate of return. So what you see is that the actual S&P 500 return, this is the ETF index tracker, is down 4.43%. The Russell's down 21.8%, so that's correction territory for sure. And the QQQ is down almost 11%, 10.66. So that's interesting. It means the markets are down. It doesn't mean they'll keep going down, but it means that they are down for now. So what it means for us, though, is that our model has an expected return of 4% on a new dollar invested today over a year. So there you have it. We ran our down model last night. There were 644 stocks that passed data validation, had $500 million in market cap, traded every day, were listed common shares on U.S. exchanges, and lost money. And so what's of note is that DraftKings, DKNG, has the lowest beta of all the money-losing stocks that made our model, and that Marathon Digital Holdings had the highest beta of 3.46. So you could see both of these stocks later in our discussion, but probably worth taking a look at DraftKings and Mara to see how they're behaving differently. Overall, the market is a bit more risky, so the expected return of the down stocks, because they have higher beta scores, is 6.5%, and they had a fairly high variance of 3.8. Now that compares with an S&P 500 variance of 1.2. Those are all 10 to the minus 4, but you just focus on the big number. So 3.8 versus 1.2 means money-losing stocks had triple the variance or more than just putting your money in the S&P 500. So we noticed some interesting volume action. Some stocks are trading at 10% or less of last year's volume. Wow. So if you had a stock that traded 100,000 shares a day, now it's trading 10,000 or 5,000 a day. So what happened? Other stocks are trading at 300% or even over 500% of last year's average volume. So a good way to look for stocks is to look for what's trading, what's hot today, and see if you can try to figure out what's going on. Is it going up? Is it going down? Are people acquiring it? Are they selling positions? And that might show an opportunity to make money. We also have stocks that are down 70 to 90% from their average trading prices over the past year. So if you look at the stock and you look at what it traded at, maybe it was 100, maybe it was 90, maybe it was 80, and then all of a sudden, now that's the average, then all of a sudden it drops. It drops 70 to 90% from that level. We see some of those, and those are significant lines, and we see some familiar names in the list. These are bottom fishing targets. So if you're the kind of person that believes in turnarounds, that believes that a new executive team can change a company, that people can change, then sure, that's great. In fact, we saw a stock yesterday, Party City, you probably heard me talking about it on Twitter, right, where the stock is basically trading at bankruptcy prices, or close to bankruptcy, because they had a bad quarter. Now maybe the management team will turn things around and then the stock will go back up again, right? So that's where you look at for stocks down. On the other hand, we have stocks that have appreciated 30% to 114% over the past year, right? And those may still run and in some cases reflect, I would say, a macroeconomic trend. Like oil and gas prices are going up, the stocks are going up because they're just a multiple. You used to see that with mining stocks, but mining stocks are not in this list. We also have positive and negative skew stocks that we identified. I'm not really sure how to analyze them, but I know when we first built the model, we thought this was important because if you look at your most skewed stocks, they tend to trade differently the next day. So people are looking at skew as a chance to either buy or sell. We have another filter to find leptokurtic and low variance stocks. There's either 3 of them in this list of 644 or 10 of them, depending on how tightly we set the variance levels. So these are stocks that had fewer extreme daily price changes. They tend to cluster around the mean. So if a normal distribution looks like this, they tend to have a much more pointy top. Taller and pointier top, thinner tails. So in our experience, they've tended to be less risky during extreme price movements. However, they can still move. Verizon is a money-making stock that tends to be leptokurtic with low variance. It just doesn't move that much. Maybe because it's just the way it is. It's a high dividend stock that doesn't move. But there were 3 of them or 10 of them in the money losers that could be interesting. We also see stocks that are platykurtic with high variance. So we set our variance filter to capture 20 stocks. It isn't set for 20, it's set with a variance level. And these are stocks that are both platykurtic and exceed a multiple of variance of the whole stock portfolio. So these stocks tend to have very high price swings. They tend to move a lot around their mean returns, and they can have significant advances and declines. I recognize a few of those stocks. They're story stocks, and they're very active stocks, right? One's a uranium miner. One's a Bitcoin miner. One drills for oil. One looks for vaccines. You know how that is, right? You either hit or miss. There's 2 electric vehicle industry suppliers. And there's one that wants to export liquid natural gas and is building the facilities, very expensive, lots of capital, to export liquid natural gas from the United States. One of them's a cannabis brand. These are volatile for company, and they're also volatile because of external commodity prices and or political factors. These would tend to have much more volatility than leptokurtic and low variance stocks. So it's a good way to find kind of what's moving and shaking, what has a lot of tail movement. We also identified stocks with one-day price spikes and stocks that rose or fell significantly in a single day. So I think of these stocks as they're either in play if it just happened, or they've probably blown out. And they may not trade in a normal pattern for quite a while. So imagine a stock that trades for $1 that hits 30. And then it slowly makes its way back down to $2 or $3, right? It's blown out. There's people that are still holding that stock that paid 30 that are waiting for it to go up again. And the people that are kind of in the know that play the games with these stocks, that drive the volume, they know that they've already played it out. Finally, we have negative beta stocks, we have low beta stocks, and we have high beta stocks identified in our model. So the high beta stocks are interesting. Those are typically tech or new industry stocks. And they require some belief, right? So belief in their valuation. So when the stock market goes up, maybe that belief rises, right? And when the stock market goes down, maybe there's less belief. Just find it interesting. Low beta stocks. These can be utilities. Now these are money losers. So they're utilities that maybe didn't make any money this year. REITs. There's some speculative names like DraftKings where they're moving kind of to their own tune. And there's a set of more industrial firms. We note the speculative names because they may be moving on specific company information or investor-driven sentiment. And they detach their movements from the movements of the overall market. We have 2 negative beta stocks in our down run. They're both very speculative names. Good to know what they are because you probably want to short them. And then finally, we've identified all the stocks with dividend yields actually paid over the past year that are over a certain level. We've identified it for this particular run, anything over 5%. And so we like the actual paid model because that shows what an investor would actually kind of have in their pocket after a year based on the average trading price of that stock. And so in today's run, the higher yielding stocks were either investment companies, And why would an investment company have a loss? Because they have to mark to market some of their investments. It doesn't mean they lost the money. Let's say they're holding stock that they got from somebody, right? They did an IPO or they did a secondary and they're holding stock for a year. When the stock goes up or down, they either have a gain or a loss. REITs don't have to make money, profit, but they pay out their cash and dividends. And then oil and gas MLPs, same thing. A master limited partnership is a limited partnership that's publicly traded on a U.S. stock market. Oil and gas likes to take some of their capitalizable assets that throw off cash but don't grow, like a pipeline or a compression facility or equipment. And they want to put them in a separate company and then basically milk the cash. But if they lose money, lose profit, that's actually really good because your basis in that investment goes down. And there's a shipping company in there, which was likely a cash windfall from rising shipping rates. So let's see. The last thing I wanted to look at is maybe where are the futures. But I want to make sure you have a great day in the markets, that you understand what we talked about, and that Chicago Quantum is here to help you. So let's take a look. Where are we with the futures? I actually heard a rumor that futures were up today. So is it true? Looks like U.S. equity futures are up. NASDAQ's up 2.5%. S&P's up 1.5%. So it looks like these are going to pop right at the open. The Nikkei is up. European stocks are up. VIX came down a little. It's still high at 32, but not that bad. And then, of course, let's look for the usual suspects. So copper's up. That usually goes with the market, with the stocks. Gold and silver are up slightly. The dollar's down. So, yeah, yields are down. So this looks like a day when the market's going to have a chance to run. If you're long the market, good luck. If you're short the market, probably time to cover, which will drive even more long. Now, what's interesting is it's hard to know whether we're in a market where, we're in a real downturn, a real correction, right? And I'm not going to look at the news yet. I'm just going to show this to you. So if you were in the S&P 500 and you wrote it up, you suffered in October. It dropped, right? It dropped quite a bit. It dropped from 4,500 to 4,290, right? Not that much. And then it popped back up to 48. Came down, came up to 46, came down to 4,000-ish. Now the question is, what's it going to do? It is hitting lower lows, and lower lows tends to be a sign. Lower highs, although that doesn't really apply here, right? Because lower high and then a higher high and then some lower highs. So you have a market that looks like it wants to be in a downturn, but we're not sure yet. So we're not calling this. But it is always interesting. Now we look at crypto and you see how green these are. Bitcoin is up 4.37%. It's still at 32,000, but this is showing you that there's real fast money pushing into Bitcoin right now. The speculative taste is out there. And so people are in the market today. So what I would say to you is be careful. Don't invest more than you can afford to lose. Watch your news, right? Who knows? There's no real news out there. There's no real news out there. Just be careful in the markets. Have fun. Make money, right? And know that today is an up day. At least at the open, it's an up day. This also could still be a head fake. I got to tell you, if I've been chronically long for a year, I'm going to enjoy when the market goes up a little. If you're short right now and you're heavy in puts, then you're just waiting for the next downturn. And so, but nice to see the futures are up. I also like to look at Yahoo Finance. They also have a different market futures, and what I find interesting is the data doesn't always match where FinViz is at. And so, what's down is natural gas. That's fine. Crude oil's down a little. That usually helps the market. And what's up is NASDAQ futures are up. Palladium, S&P futures, Russell futures, Dow futures. When what's interesting is the 10-year bonds are up, so yields are down. So it's a perfect storm for you to make some money today if you're long, and work on it if you're short. Just try to hang on there. And my guess is if we were to look at some of our industries that we follow, money managers, and we were to look at pre-market for the money managers, yeah, take a look at that. 2 down, 15 up, 20 up. So yeah, today's going to be a good day in the markets for folks. Good luck out there. Have fun. Be safe. And don't invest more than you can lose. And by the way, if you liked the video, this was a little more educational today, leave a comment. Let me know you liked it. Let me know what you might want to hear more about. Hit the subscribe button. That really helps us. And maybe check out the website. It's chicagoquantum.com. We post a lot of information. We post blog posts. A lot of times we'll post the actual stocks. We didn't today